Hello and welcome to the weekly wraps. This week has been once again a very, very busy one. So in terms of some of the main things we've seen this week, one of the key focuses this week was of course the ECB policy announcement. So in terms of the interest rate decision itself, that was very much a non-event, nothing out of expectations there as they kept all rates on hold and instead all attention turned to that ECB press conference. So Draghi et al. They announced that the ABS programme is to begin soon and it's run for 2 years. However, the key focus was that the balance sheet is going to be near March 2012 dimensions. That's an extra trillion euros above where we currently are right now. And another key focus was that the Governing Council were unanimous in this decision. So that's despite some of those ECB source comments we did see earlier in the week which suggested there could be some mutiny in the ranks. So following this policy announcement, we did see euro-dollar place a further squeeze, so it slipped below that 125 handle and briefly broke below 124. And fixed income markets, we did see bonds sell off actually following this. That's as people shifted away from the German paper and into high yields and peripheral paper. And today we have just seen the release of the US monthly jobs report, so the headline NFP figure that fell short of expectations. So the market was positioned for a slightly higher number than expected, 235,000. So that's following the strong ADP report we saw this week, as well as the employment components of the ISM releases. And as well, we did also see a miss on the average hourly earnings, which disappointed markets despite the unemployment rate falling to its lowest level since July 2008. So following this, we did see a pairing of some of this week's gains in equities, whilst providing a late boost to US Treasuries. And elsewhere, just looking across the marketplace, the dollar index has once again been a sole driver of the action there. So following last week's surprise decision by the BOJ to increase their stimulus package, the dollar index has rallied throughout the week, with dollar yen taking out 7 handles in 7 days. With some of the commodity currencies particularly hit by this, it's been a bit of a double whammy for them, with the dollar weighing on the energy and precious metals complex, with gold now trading at its lowest levels since 2010, with the downside in energy prices not really showing any signs of recovering, given that OPEC said they are not to intervene in oil prices at this moment in time. That's all from me, and I hope everyone has a fantastic weekend.